What's up, guys? Welcome to Smart Edge FX. My name is Smart Obata. I'm a forex trader and also a mentor. Okay, we have the setup that is coming up on USD on gold that I want to share with you. If this is your first time of coming across my channel, please subscribe and hit the notification bell so you get more of this infos whenever I post it online. Okay, so please just let's go to the chart and let me show you what is coming up on gold. Very interesting. You see, there was this sell-off had in some of the few sections that we've had. Okay, the gold sold off massively. All right, so it's not actually a change of trend. That is a correction, and we've been expecting that in the market. We've been expecting that after market have hit some major targets on the daily time frame, so we're expecting a pullback, which would be good for re-entry for those who are bullish. If you're bearish, then you have to wait because this is not the right time to sell. If you still want to sell on this market, then there will have to be a break of this confluence that we have on the daily time frame, which I'll be showing to you right now. So on the chart here, I'm on the daily time frame. I'm on the daily time frame. You can see market is already reacting to this level. Okay, so what do we have on the daily time frame? On the daily time frame, we have a market that is oversold. Okay, this is an oscillator predictor, this blue line that you're seeing here. So it tells you that the market is oversold. All right, so and when market is oversold, we expect pullback. So now if you check from the chart, we have this confluence support. We have this confluence support around here, around 4315.33, 4341. Around this region, we have this confluence support, which is also the previous high around here. You see this previous high around this place. Okay, you see around this previous high, markets has pulled back to this top again. So now we have this confluence support around this area, so we expect a pullback. All right, we expect a pullback to at least 382 of this recent move down, this bearish push down. Okay, we want to see a pullback. Even if you want to, for instance, say you want to short this market, you're not going to be shorting here. You have to wait for a pullback. But I don't even advise that now because gold is strongly bullish. All right, gold is really bullish. So this is a more like a momentum trade that we have to join on the current trend up. So now this would be a right place to go long. That's if you want to buy. This is an area that we expect pullback to at least. Let me show you what I mean on the chart. From this high to this low. So at least a pullback to this 382 0.382 area. Okay, that's around 44.04. So we should expect a pullback to this area. But for me actually, what I'll be doing is this. That's for me. Okay, and this is not an investment advice. This is just for educational purpose only. Okay, so this is what my own view. All right, so we can still check your system, check your methodology, how you approach the market, and know if you're to buy or to sell at any given time. All right, this is just for educational purpose, please. All right, so from this point, from this area, excuse me. Okay, this zone, at least we should expect a pullback up here. Then maybe we can start thinking if we can get an ABC retracement to the downside, maybe up and down here. I don't know if you get what I mean. Maybe we'll get something like this. You understand? Then up to this top. Maybe, nobody knows. We don't predict, we only react, because right now we are reacting to this level. All right, we know from our own trading methodology that we expect market reaction around this area. And even if we are wrong getting into around this area, by the time the market pulls out from that place, you can move your trade to break even. That's one good thing about trading around these levels. Okay, whenever you just have a pullback, then you can just move your trade to break even immediately. Then if you're wrong and it comes down again, you're already out from the market. You understand? So that you react, and there should be ifs in your analysis. If it goes like this, what am I going to do? If it goes this way, what am I going to do? You don't guess, you don't predict. Okay, you react. All right, you react. So that's why if you want more of this, you subscribe and you'll be getting it. I'll be posting some updates, and I'll also be dropping my Telegram channel, which will be coming up very soon, and I will be sharing with you guys some free trade setups on a daily basis. Okay, so tons of things to get from this channel, tons of things, guys. So on gold, like I said, this would be a good area to consider a long entry to the upside. All right, that's my own view, please. All right, so I don't know if what you would like to do on the chart. Okay, on this gold setup that is forming on the daily time frame. So what do we have on the daily time frame? We have a market that is oversold, okay, which has hit a confluence support on the daily time frame. At the same time, at the previous high around 4,376, this high. So we have this confluence support where you don't want to be selling at all. If you want to sell, wait for a pull back around that top, then you can maybe think to join to sell. But I don't want to be selling this currency right now. I don't want to be selling, to be honest with you. I don't want to be selling. And there is something else again that I'm seeing, which looks much like a stop grabber that suggests taking out this high around 4,542. Okay, around this top. And don't forget, we have an unhit target, which is the XOP, around 4577.79. Around this top, this is an unhit target. Okay, and market left it with not much pips actually, so it can still go up and accomplish this target at XOP. It's very, very possible. Okay, it's very, very possible because nothing has changed fundamentally. Fundamentally, gold is intact. There is no I didn't see some news that might make investors to change their narratives on gold right now. Okay, I'm just seeing this pullback just like a profit taking, and also we are around the holidays, and big guys taking profits in the market. It's good to take profits when you've been making some good money. At some point you just have to take profits, and that's what we're seeing on the chart. And now this reaction, you can join and buy if it's okay for you. You can join and buy. And let me show you something on the 4-hour time frame. Sorry, on the 4-hour time frame, what do we have? This is what we have on the 4-hour time frame. You see this trend line? Market is reacting to it. Okay, and this trend line now is also with the level that we have around, with the level that we have on daily time frame around 4315.33. okay, just around there. So I think we should be, you see this trend line? Okay, as long as market remains above this trend line, we should only consider buying. And if it drops lower to this place, it's still a good place to buy. It doesn't change the trend. Even if it moves down to this place, to 4,257, that's if there's a break below this trend line and the market moves to this low, it's still a good place to buy gold, because guys, this gold is in a high demand. It's in a high demand. Okay, because banks are buying in large quantities. Banks are buying, they are hedging. Investors, you see, when there is uncertainties, when there is geopolitical tensions, these investors move their money in gold. Okay, you have to know that, and that's the reason why you just have to find out what's happening fundamentally. Even if you don't trade the news, you have to understand what is the reason behind the move. You don't just open up your chart and start buying and selling because it breaks a trade, because the thing breaks trend line. You just say, okay, maybe just enter the market, buy or sell. You have to understand the reason behind the move. Why is it going up? Why is it falling? It doesn't just move randomly like that. And mind you, don't trade headlines. Just know where these guys, this smart money, are moving their money. And when you make your research online, you find it out. There are some free resources where you can find out this information for free. You don't have to pay for them. Okay, so after making your inquiries, making your research, when you come on the chart, you already have the idea of the trades that you want to take. I don't know if you get me. Don't trade blindly. Okay, don't just watch your chart and say, okay, because there is a break of structure, you want to enter. It doesn't work that way. Okay, see, these investors, like I said, follow the yields. You understand? And they want most times to hedge. Okay, I'll be showing you guys how these guys move their money, where to catch them, where to join them, and when to get out of the market. You understand? So there are tons of things to be coming up in this channel. All right, so currently, like we've said, what we should be waiting for is market moving up to this top, to this side. Okay, then maybe we can get an A, B, C, maybe D point around this area. Okay, but we don't know for now. We are only going to react according to the market sentiment. Okay, you have to know what is the sentiment of the market. You have to understand if the sentiment is in line with the fundamentals of that major currency that you're trading, or whatsoever pair that you're trading. You have to understand what is happening. Why is it moving? You have to get all those information. Don't trade blindly. Okay, I'm telling you out from experience. I'm telling you out from experience. Even at times they tell you something and they do the opposite. Even if you catch them, no matter how they lie, you catch them on the chart. Just understand what they're saying, understand what they're doing. Then after they might have said whatsoever they are saying, no matter what it is, the reality will show itself on the chart. And that is by Fibonacci. We trace their moves with Fibo. Any place where they go enter, we go find them enter that place. For this time around, we don't go agree for them. You understand? So we use Fibonacci analysis to pinpoint our entries and our exits, with some other chart patterns that I will be sharing with you guys on this channel. A lot of things to come up. So please subscribe if this is your first time. Subscribe and hit the notification bell so you will be notified whenever I release videos like this. Okay, so see ya tomorrow. Let's see what happens. Okay, because our own is to analyze and wait and act. We don't predict the market. So this market is already pushing up. This market is already pushing up, guys. So if you can back if you want. If you want, I think you should do this on the daily so you can see it very well, where the invalidation point for this setup, okay, should be below here, and you can target this top. Okay, but the moment the market moves in your favor, don't forget to move your stop to break even. That's if you're on the trade. So Let's see what happens in the markets. See ya guys on our next trade. Bye for now.